We are live.
Are you sure?
Are we? Are we live? I'm going to jump right into the disclaimers. We have no crystal balls. This is strictly our opinions. Content provided at the event is for general information only and not intended to provide specific advice or recommendations for any individual. Any performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Any economic forecast set forth during the event may not develop as predicted, and there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial and do not represent the views of LPL Financial. Securities offered through LPL Financial member FINRA SIPC. Investment advice offered through Gimbal Financial, a registered investment advisor and separate entity from LPL Financial. Good morning, everybody. As you can see, Amanda is not with us today. She is actually out at Turkey Run State Park and she's walking the trails, and it looks like it's going to be a beautiful day out there. So I'm sure she's going to have lots of fun. But I will introduce you here to Keith Tyner and Doug Shreve. How are you guys doing today?
I'm doing great. It's a beautiful day. The temperatures have got rid of all that humidity we had the last couple of days, and Doug can sit over there in the new office and breathe fresh air.
Oh, yeah.
Yay.
Good to be with you guys this morning. Let's see here. Deb, if I share a screen, am I going to kick your screen off?
Hey, let me just kick my own screen off.
Oh, okay.
Oh, hang on.
Well, you know, if any of you have called into the office ever in your life, then you know that Deb, she talks at a speed that's almost as equivalent as Amanda when she's reading the disclaimers. And so nice work today, Deb.
I told them I won't be reading as fast as Amanda can read it.
What are you going to do this weekend, Deb?
Well, I'm going to kind of lay low, but one thing I think I'm going to do is Jeff and I are going to make a road trip over to the new office so Jeff can see it.
That sounds like a good idea.
Yeah, lots of
You can
progress
see
going on there.
We have new things like this.
Wires, yeah.
we have electrical wires running everywhere, and that's a real positive sign. We have windows in, and so if you haven't driven by Gimbal under construction in a while, cruise by this weekend and check it out. There's a lot of progress being made, and it's been encouraging to see.
Yeah.
How about you, Keith? What are you going to be doing?
I think it's called a Blackstone. Have you heard of a Blackstone? It's new grilling technology.
I've got one.
Oh, yeah. So I seasoned my Blackstone last night, so tomorrow is going to be the inaugural Blackstone morning for me. So if you guys are bored, stop by. Who knows what might be on the griddle?
Maybe Jeff and I will just make our road trip tomorrow.
Yeah, there you go. There you go.
It's a great breakfast machine. I mean, you can cook for the neighborhood on that thing. And then I'll also say, I think the best hamburgers are cooked on a Blackstone because all the grease stays. It doesn't drip underneath the grill. But so all you grilling and hanging out this weekend, we do hope that you have a great weekend. It's going to be awesome ahead weather-wise. And anyway, we'll jump in and talk about the stock market and what's going on in the markets today. Let's see, just shared the screen with you and pulled up the Nasdaq chart. And there's something on this chart that I haven't seen for a while. Keith, do you know, what is it?
Well, a couple things. Red, and something we talked about early on, long lines. I do not care for long lines.
And so Keith is talking about this red right here and this long line. So most probably could guess what that red is, but what does the long line mean? What is that?
Well, when we look at that chart and we look over here, I've got my own chart. If you'll go over to the 98.38 to the left there, Doug, keep going, left, farther left. Right there. Yeah, so if you look to the left of that 98.38 and you see the blue and the pinkish red there, or whatever color, what color is that, Debbie?
I would say that is pink and blue.
Pink, it's a pink and not a red, okay.
Fuchsia.
I call it
Fuchsia.
pink. Fuchsia.
All right, so if you look at those lines to the left of where Doug's cursor is there, they're all short lines. That's a fairly good market to breathe in and out. And then when we hit that 98.38, all of a sudden we started getting long lines and those are daily activities of the stock market. And those long lines are just more dangerous of a market, more challenging of a market to try to make money in stocks. And then if you go to the right just a little bit where the 50-day and the 200-day merge there, we started going upwards and the lines really started getting much smaller as we were going upwards. And there were a few long lines along the last 6 months, but mostly we had short lines, and it's easier to be an investor when you have short lines. Well, it's less stressful.
So these short lines over here, the price just wasn't moving as much. Whereas if we slide over to yesterday, we even opened down and then closed. This horizontal line going across the vertical, that tells you where the market closed, where the Nasdaq closed that day. So we like to see them short and we like to see them tight because that keeps things nice and smooth. But yeah, we had a pullback yesterday, and I'm always amazed at how pullbacks tend to go to support. And so this green line, if you've been following us for a few months, the green line is our 21-day moving average. Red line is our 50-day, and then the black line is our 200-day moving average. And so it found support right here at the 21-day, which it's done before. That's nothing new. And I was encouraged to see it stop right there. Had we gone through that, it would have been a little more interesting.
Can you hit the refresh on yours, Doug? I don't know why that's just showing one line there.
Let's see.
Maybe click on the stock symbol and then go back to that.
Yeah.
Or something, yeah.
There we go. Yeah, it looked like the market opened up since I've looked at this last.
Yeah, so even if it's down a little bit today, but it's right there on that green line. It's really interesting.
It's right there on the green line. And you know, last week we had a good discussion with you guys, just talking about the major contributors to the Nasdaq. And one of the major contributors to the Nasdaq is Apple. And Apple had a rough week this week, but I was talking with a friend of ours yesterday who has owned Apple for years. And some of you who own the Nasdaq or a good mutual fund, you've actually owned Apple for years too. You just didn't know it. And it's just been a rock star of a performer. And so that happens when things get a little frothy. Investors say, you know what, I'm content with this profit. I'm going to take a little bit off the table. And that's what basically happened the other day, is investors decided to take some money off the table.
I think we see I think what we're seeing is just a traditional major battle between fear and greed going on in the markets right now, Doug. If you punch in ZM, everybody and their mom has heard of Zoom video, because if you're live with us, you even know what it is. But look what happened to this stock this week. In one day, it shot up it almost doubled in a day, and now it's given all those profits back. Well, the greed drove that thing way up, and the fear is those people that bought on that blue day where it was really up, they're running for it's like a crowded movie theater and somebody's yelling fire, and they're running out of Zoom even today. And so those are the motives, those are the psychological things that dictate the short-term direction of the market, of just fear and greed. And some of those stocks like that, or if you punch in Tesla, where you've seen those things that have shot through the roof like a rocket ship, they're just coming back down to earth at a similar kind of angle that they shot up. So that's
nice example on Tesla there. Rocket ships and
yeah. Draw a line. You know, I use that line pin on there, Doug. If you draw a line on the tops of that going up from right around the 273 to the top of where it picked, right click. If you right click, then it'll say line pin or something like that. You don't, just right click
I'm slow here. It's not giving me the option. Sorry.
Oh, okay, yeah. So if you can see where it's 273 over to the right, the second 273, and you connected the tops from there all the way to the top of the market and see that angle there, uh, um, then the angle that it's coming down is very similar. And that's not unusual activity for stocks that have such a massive run like that. They oftentimes come down at the same angle.
Looks like they're experiencing
Technical difficulties.
Looks like we're experiencing technical difficulties at Market Smith on our chart today. But yeah, it's interesting. You know, one of the guys that we like to follow at Gimbal, and we've got several different research partners who are great business partners and becoming friends, and they're helping us help you daily. Mentioned on their podcast or their website the other day that the market really hasn't had a bad day since June. And this has been one of the most amazing rallies that I've seen. It kind of reminds me early on in my career, in 1998, 1999, when things just shot up pretty quick. And so the other interesting piece of news this week that I saw was that the jobless numbers have come down a bit. And so we're under the minus 10% mark. We're around 8%. Negative 8%, which has been very encouraging, and we really think that as far as inflation and rising costs of goods, that may be in our future, but it's something right now that is causing us to basically look for different ways to invest your money outside of the traditional fixed and guaranteed assets. Many people right now, when they think that inflation is coming, they look to gold or they look to a security called TIPS. And a TIP is a Treasury inflated protected security. And the idea is that as inflation picks up, investing in a TIP would rise in value along the way and help protect you. But as we looked at different types of places where your money goes, food, groceries, energy costs. Food and groceries have picked up over the last couple of months, but energy costs have gone down big time. And so the guaranteed money, like in a TIP, they're producing negative yields right now. And so it's really a difficult place to find safety for your dollars today. And so that's why you're going to probably see more cash inside your portfolio when markets do sell. And we probably won't run towards things like TIPS, or a few years ago we had some auction rate preferred notes that gave you a guaranteed income. We're probably just going to keep cash as king for right now.
That cash, when it's in your account, it will be reflected as money market. It'll say money market on your statements, and we wish there was a better alternative for you, but there really isn't. I was traveling this weekend and I saw a billboard that said 10% for your IRA money, 10% monthly, and I saw the billboard once had an asterisk by it, and so I thought that's illegal, and then we drove a few miles later, I saw the same billboard again and noticed this time it had an asterisk by the 10%, and it said 10% monthly on an annualized basis. Well, that's a lot different. 10% monthly is 120% in a year. 10% annualized is a lot less than 120%, but even 10% annualized in a billboard format that suggests that it's guaranteed is just dishonest as all get out. And so I would just encourage investors to be careful, because there's a temptation. This is usually the sort of market where con artists take advantage of people that are trying to find higher yield. And it's not the time to believe things like a billboard that says 10%. It's time to be very cautious with your safe money. So don't try to stretch the bounds of what the market's actually offering you. It's a good chance to get taken advantage of.
Yeah, and there's new issue stuff coming out all the time too, like preferred stocks and things like that. I can remember I worked for a big brokerage firm when I first got into the business, and they would come out with a preferred stock of the week. And with that preferred stock of the week, you know, there would be some type of enticing interest rate for you to buy it. However, what they didn't tell you is that as soon as you bought it, that they had to pay the broker's commissions and everybody else's commissions, and your price dropped within just a few days. And so just be careful out there. Know what you own. If you're watching this and you're like, well, I don't know what I own. I know you guys talk about ETFs and things like that, but I don't know what that means. Spend some time with us and call in, and let's really dial in so that you know what you have and you're confident with it.
I would add that if you are trying to find something higher than what you're getting in your money market or your checking or savings account in your local bank or credit union, I would encourage you to look at your own balance sheet, your own net worth statement, and see if you have any debt on there. Because if you have debt on your net worth statement, suppose you're paying 5% interest for something and you've got money sitting in a money market earning 0%, you're going to get a 5% guaranteed rate of return by prepaying whatever that debt is. And so that's a real simple way to buy yourself some peace of mind and get a higher rate of return with no risk whatsoever. Nothing is no risk because we have inflationary risk and things of that nature. So you're always, no matter what decision you make, there's a risk that it's the wrong decision. But if you're trying to get a higher rate of return and believe in that billboard that says 10%, don't do that. Look at your balance sheet. It'd be my suggestion.
That's cool. That's great advice too, because, you know, Keith and I, we were talking earlier today. Yeah, that's a better investment than even loaning the government your money, because you've already paid taxes to the government. And then if you buy a tip, you're going to give them some more money, and they're going to guarantee you a negative or low interest rate. And so if you could pay yourself back, that's always a better move.
Yeah,
but,
absolutely.
That's what's going on in the marketplace. If I had the charts up, I'd show you the VIX. I know we talk about the VIX from time to time, and that's something that Keith and I look to monitor to see what type of risks are in the marketplace right now, and they are elevated. And so you're gonna see Keith and I respond to that. And you know, even this week we trimmed back and took some gains in a few portfolios. And so we're constantly monitoring things for you and taking a look at the risk. Oh, thanks, Keith. Yeah, there's the VIX. You want to talk about that real quick?
Yeah. The VIX, it simply measures the volatility in the marketplace. And if you see up here where it says SIBO volatility, it's just some technical jargon, but the S&P 500, it's saying how volatile, how much of a roller coaster ride are you experiencing in the S&P 500 right now? Well, over here to the left, this is where I told you earlier we have these short lines. When the VIX is trading below 20, you're going to have short lines generally on your stock charts. Then we had into February and March, where this thing shot up to over 80, which is, I'm going to switch this to a monthly perspective and go back monthly. That it happens, what year is this? This is 2008. Over here, it got up to 80. And we've had, there's a lot of action on this chart, but that's the only other time where it shot this high. And in February, March, this thing hit 85. So it hit the same level as it did in 2008. And it would be, you know, if you've ever gone skipping stones and you take a little stone and throw it into the lake, you're going to cause a little ripple out there. But if you take a big boulder and throw it into the lake, those ripples are going to keep going for a while. And that's what's happened here, is that we had this big boulder when the government shut down our economy in the March-April timeframe, that it threw a lot of uncertainty. People were freaking out, running out of the markets, and then they had to figure out where to put their money. Well, as the market started heading back up, it stabilized a bit, and we had a jolt there around the middle of June that it popped back up to 44, and we see this jolt today that we don't know where this thing is going. We're paying a good deal of attention to that, but what we'd like to see is, I would like to see that our governments would start opening things back up more so that we can get back to managing life a little bit better. And I think That's a dangerous move if you're a politician, but I think the free enterprise system will cause people to respond to whatever the government does by whatever their comfort level is. And so I don't know that opening things up is going to get a lot more risky than it's already been. The government created a lot of risk already if you see that volatility index. So I think what the government needs to do, and I don't usually get political on this, I think the government needs to turn the risk decisions back over to the citizens and let them decide whether to stay home or not, because we're going to, if we don't get the economy back open, we're going to lose some jobs permanently, I think, and that's going to be unfortunate to those people that are providing for their family. So that's what this market is showing you right here. And so it's a hard decision for everybody on how to respond to this, but volatility, I think, until we unleash the economy, is probably going to be part of where we're living in the markets and investments.
Yeah, so just stay tuned and expect some volatility moving forward in the next couple of months as we have markets that have gone up really nice. We've got voting that's going to take place. We've got third quarter profits. We've got a lot of stuff happening in the next couple of months. So just stay tuned. And it's probably not going to look like a market that we've had in the past 3-4 months. It just won't look like that. But anyway, that's what's going on in the marketplace. I got to tell you guys what's going on in the neighborhoods. Debbie and I had a discussion yesterday. I took a walk around the block here at Gimbal, and we have several residential houses right behind us. And I was so encouraged that one of the ladies who has a house back here, on the corner of her lot, she had a garden. And she said, please pick, or something like that, and please take. And so she had tomatoes, she had spices, she had hot peppers, and she had all this stuff just for her neighbors to pick and take. And I thought that is just the coolest way to build some friendships and community. And so I had to go knock on her door. I kind of felt like a salesman that I think I was even wearing a sports coat, that I knocked on her door and just thanked her for what she was doing. And so this is going to be a great weekend for you to get out. And if that looks like walking around your block or taking care of your yard, I don't know what it is, but opening the economy back up will probably start just neighbor to neighbor and just recognizing each other and saying hi and checking in.
I would add to that I was compelled to go kind of check out what's really going on around the country last week, because I finally just had this heart of compassion that there's Indianapolis is a lot more open of an economy right now than other places in the country. And so I had a heart for those folks that are locked up in small apartments around the country in major cities. And I really hadn't thought about what their experience is, because I'd only experienced my experience. And we're pretty open, relatively speaking, here. And so there's fresh air, there's parks, there's all kinds of things. But those folks in big cities have a different experience than folks in a more open area in the farmlands and such. And so keep those folks in your thoughts, because it's a different experience for them. Their anxiety levels, I suppose, are much higher than those people out in the country. And I've noticed that all summer long as I've traveled a bit. But I think even having observed that and thought about that, I think this Keith's prophetic moment. You guys can jot this down and check back on it in about 25 years, see if I was right. But I think we're going to see, with the advent of more internet accessibility beyond the cities into the country communities, I think you're going to see an exodus from those cities into the communities around the cities. And so probably those folks that live in places like Pendleton or Fortville or someplace like that, I wouldn't be surprised to see their property values go up as demand comes into there from places like Indianapolis or outside of New York City to places around there. So those kind of exodus, I wouldn't be surprised. Those things happened in the 70s, the 60s and 70s. And just like the stock market is a cyclical component that goes through cycles, so does our demographics as a country. So with all that said, and going back to what Doug said, on my journey this past weekend, we rode on the national highway, Highway 40, for quite a few miles. And if you're close to Indianapolis, you can jump on Highway 40 and go on a pretty nice car ride and experience some of those small communities. What I was surprised by with those small communities, I had seen the money that was poured into suburbs and into inner city places over the last decade, but I was really shocked by what those small communities have done and how they've really picked up the vitality of those places. So get out, go for a ride. Maybe you find a little diner out there that you can sit outside and have a great lunch or evening meal sometime this weekend.
And the idea that investments are being made in infrastructure is encouraging out in the countryside. I mean, you think about it, several years ago, and those investments were made in power and light and gas lines, telephone lines. I'm sure some of you on this call, you probably ran those lines out in the countryside. And so as internet becomes more available and technologies for power increase where you can self-contain, solar, wind, you can have a lot of different sources for power these days. It's gonna change the lifestyle. I remember early on in COVID, when the schools were first shutting down in the spring, some of our friends, they have kids out in Kosciuszko County in Indiana, and I think I've mentioned this before, but the way they were getting internet was through a Wi-Fi router on a bus, a mobile connection on a bus, and they would come out to the bus and do their schoolwork. And so those are the types of stories that people will talk about, and they just won't believe that that's what took place in 25 years when you look back and you say, oh, well, look what we have now. And so infrastructure investments will get very interesting. And I think that's something, from a political standpoint, that both parties can get on board with and get along with.
Yeah, on my travels this weekend, I was going to show you a photo here that was something that was kind of intriguing to me along those lines, Doug. It is not jumping out at me. I know I've got it on here. I may have to show it to you all next week, but the reality is that internet will be a whole different experience as we look to oh, here it is. As we look to the future, there's going to be just a different way of looking at things. And so this is something that, I don't know if you can see this right here. Can you make out this black and silver thing here?
I have no idea what that is.
Well, in major cities, they used to have a thing called a phone booth. You ever heard of those? This is the new version of a phone booth, and this is free Wi-Fi that'll be transmitted out of this mechanism to the community. So it's just going to be floating out there. And so if they can do it in a city, I wouldn't be surprised if that's going to be out in the countryside before too many more months. I mean, the ability to get these things in places has just even developed much faster than in the past.
I'll never forget the first time I saw a free Wi-Fi sign like that. Your daughter Kristen and I were in Ukraine, and we were walking through a park, and on the trees it had a big sign that said free Wi-Fi. Yeah. I would say, as we're running out of time here, the last thing I'd throw out to you, I saw this question earlier today. It said, let me ask you a question. Was there a moment you were worried during the recent 20% correction? Really, the correction this March was more than 20%. It was 30 or 40%, depending on how you particularly were invested. I'd say if there was, call us now. Don't wait. Call us now. Now's the time to call us. I'd say the second thing I'd tell you as you're thinking about your portfolios, if you've had stocks that you've been holding on to for years, those things may not be what they were. They may have transformed to something different. It's probably time to sit down and review what they actually are and protect your capital by knowing what you own versus what you thought you used to own. And those would be the two takeaways this week I'd offer to the folks out there. Hey, I'm looking forward to those conversations already. Yeah, good call. Debbie, you have anything else to add before we sign off?
No, I just hope everybody has a great weekend.
Well, you did a good job running the call today. Thanks, Deb, and thanks for getting the email out to everybody. Yeah, have a great weekend, and we'll just look forward to checking in with you next week, if not before.
Take care.
All right. Bye.